Traders, welcome back to our price action trading lesson. We're going to talk about how we can use price action rules to help us navigate the market and understand where to enter a high probability setup. So the very first step I need to do is I need to analyze this overall price action before the market opens. And I can see that the structure pretty much is resembling some form of consolidation. It's easy to see that there is no big trending market in either direction. We just have flat EMA, 12-bar EMA, and basically prices are just whipsawing up and down. So already my mindset is set that I'm trading some form of a trading range, which means I'm going to draw channels tight, and I need to identify the low of the day key level and the high of the important key level because I want to understand where the extremes of the trading range are. And now that I understand that, I did my analysis, I'm going to pay attention to what's happening right now with the most recent price action. I can see that this uptrend played away to break a new high, so honestly I was expecting some reversal here, and we're back above EMA though. So because you're back above EMA, you cannot sell. If there's reversal, you're supposed to stay below EMA. So this push above EMA is telling me, okay, there are still buyers left in the market. But at the same time, I can't really go long just yet. I don't have specifically great setup, but also I have a breaking new high. So I can't really go long. So this is mainly just some residual bullish momentum. I'm just going to wait. Uptrend played out. And market is breaking lower. And now we have lower high below the EMA. Now you can see that we have very broad break and push to new high. This is important. In trading ranges, these broad moves and these pushes, they generally indicate some depletion because the broader these moves get, you can't really draw any wider channel because it's simply too broad. Now this lower high is okay. It feels a bit too early simply because why after breaking new high, prices continue to work higher and prices continue to work higher. There was this residual bullish momentum. So for this reason, me personally, I didn't take it. It's not a horrible setup. If you're more advanced trader, more aggressive, you can definitely consider because the signal bar is so strong and it is below EMA, but if there's a clear break in new high and then you get a lower high off the key level, you can consider. But this residual bullish momentum was a little bit concerning. I'm thinking about failed second entry long. Failed second entry long is always a stronger setup. So as you can see, you have a new high here, first entry long, pull back, second entry long, failure. It happened here. I can't really sell below this bar, and now you have this bar. You can technically consider double bar entry, placing your stop loss above the initial bar. But I would use some deeper limit because it's simply closing too far down. I don't like selling at the very bottom of the move. Once again, a little bit more aggressive, didn't form that clean. Now on failures, the signal bars are less important. So you can definitely consider some limit order. If you don't use limit order, it's not the great of a setup. So once again, not ideal setup, but can be considered because uptrend played out, you're back below EMA. And now I'm going to widen the channel because the moves in price action have to be proportionate. You can see it looks too clean, something like this, but I have overshoot. I have massive spike down, break of the trend channel line. This can mean that we can have stronger correction in the opposite direction, and we have second entry short. Okay, second entry short. Normally second entry short here would be okay, but we have overshoot, so we can have some stronger pullback, and it's a double bar entry. So if I'm going to combine double bar entry with possible overshoot, yes, you can make it a little bit wider, but when you're watching this live, you don't really know. So because I have double bar entry and on top of that potential overshoot, I'm not as excited. I need a lower high confirmation setup, which never happened, at least never happened close to the EMA. Micro double bottom, I'm going to redraw correction working higher. Now when I'm watching this, we don't have fully new low yet. We only have micro double bottom. So right now I'm going to be patient because what if we're going to test the new low and we have overshoot again? So this is just mainly congestion here, no good setup. This is waiting area where I need to be very patient. I have some small trading range like this. You have new high here, first entry long, pull back, second entry long. So this is technically a double trap combined with a failed breakout. Not a terrible setup just to ride it back up because uptrend is new high, following the trend line rule, you know, but it's kind of in the middle of no man's land. It's going quite sideways. Not a terrible setup, but you know, a little bit more advanced. Breaking new high, uptrend played out. Okay. Uptrend played out, and now market tested the new extreme. Market tested the new extreme. We traded down, so we have significant downtrend, correction, and now you can see we created a low that is lower than the lowest low inside the channel prior to break. You even count the overshoot, okay? What matters is the lowest low prior to break. So this low is lower than this, so downtrend played out, which means you're pausing looking to go short according to trend line rule. You have a textbook second entry short. Look how great this looks. Two-legged pullback at the EMA, but this is a trap. We are not pattern traders. You have to understand the context. You first follow the context and then the pattern. You cannot first follow the pattern and then the context. You can see clean leg down, break, new low, downtrend played out. So you have to right now pause looking to go short. You can use high time frame to make it easy to understand what's happening. There's a clear leg break, new low. You can see it ended up failing because there's no reason for sellers to continue working lower because the main downtrend just reached new low right here. Okay, this is interesting setup. You have sort of like a one leg up, break, second leg up, and at this point you can draw some resistance because you know that EMA is going flat sideways for such a long time. Consistent pricing is up and down, so definitely looks like we have some small trend range on our hands, and you have some triple top here, some resistance bounce. You know, this is actually a decent trade. Big bearish bar. You can actually consider more advanced trade. Can consider because uptrend played out, breaking new high, two legs up. You're staying at the top of the trend range. Lower high is back above. It didn't even trigger properly. You cannot sell below this doji, so you can't really take lower high. No good signal bar, no nothing, so I have to remain patient. Okay, I'm gonna redraw a brand new uptrend here because Y prices bounce higher here, break a new low, new uptrend. You have another bounce here, but now this time Y prices bounce to the top here in the middle. Why we didn't go all the way down here? Once again, new low, first entry short, second entry short. Very tempting trade because there's no reason for bulls to go high. Everything played out. So more advanced trade can consider second entry short. Can I get something below EMA? Felt second entry long. No felt second entry long. I'm going to redraw the downtrend working lower. Okay. And market is trading higher back above the EMA. So now what I have to do is I have to redraw brand new uptrend. Do you expect new low for this downtrend? You don't. Okay. Because if you are going to zoom out, we are in a trend range. This is very healthy trend range. And you can see once again, look at this. Spike down, extremely broad price action, and another spike down. Okay, this is indicating that you are truly in a trend range. There cannot be any broader channel. It's simply too flat, too broad. So because you're in a trend range and buyers will buy at the bottom of the main key level support, since you have this retracement, you're no longer expecting new extreme to be tested, and you adapt to this clean bullish uptrend working here, because in trend ranges you expect trends to pivot quickly, and also trends may not fully get new extreme every single time because buyers will buy at the bottom and sellers will sell at the top of the trend range. So prices are continuing to go higher, and I expect second entry long. I just follow these short-term trend lines in the trend range. I want to see second entry long at the EMA. We're correcting. We have a new high first entry long, and we have second entry long. Great signal bar at the EMA, new high first entry long, second entry long, downtrend there to break new low, two legs down. So this is a great high probability setup. Uptrend is new high according to trendline rule. I took this setup myself and I ended up having a losing trade, but it is okay. I actually wasn't frustrated at all, okay, because the trade looks so good. Two legs down, second entry long at the EMA, uptrend is new high, everything aligned. This can happen. Nothing in trading is absolutely 100%, okay. You have an edge, but nothing is 100%. Anything can happen. There can be a little fake out. Okay, this can definitely happen. So if you took a losing trade here, you really shouldn't feel nothing. It's okay to feel frustrated or be mad at yourself when you take a losing trade and you know you kind of jumped the gun. You know something told you not to take it, but you kind of rushed the process. It's okay to be mad, but when you do your analysis and everything aligns and the setup looks good, you cannot be frustrated. That's how you know you made it. That's how you know you have a good mindset. Because I really didn't feel anything here. It's just a good trade. I had to take a risk on this setup every single time. Trading is about taking a risk. It just didn't work this time. No problem. This is why we use stops. But our analysis still remains. Okay, I still expect new high to be tested. You actually have a new low, high low here, but my high low on this chart is quite sketchy. Some tail at the top, a little bit congested, and now you get a new low, first entry short pullback, second entry short failure. Now, this is very tempting. This is very tempting to re-enter, because our analysis still remains the same. Okay, just because you're losing trade here, it doesn't really mean that this option is not going to get new high. There can be just a little fake out, market may stall a little bit. That can happen. So you are definitely looking for reasons to re-enter, but the signal bar is quite neutral, especially if you are part of this consolidation. So the signal bar wouldn't be that big of a deal if it's clean, but we're going quite sideways. I don't know, I can re-enter. I didn't re-enter here. I just took a losing trade here and I waited, but you know, I can see some traders re-entering here because the signal bar is small. And I definitely noticed some traders had some different bar. If you have a better bar, you can consider, but a little bit stacked. It's a shame there was no better bar. And uptrend played out to break a new high. So you have great price action, break a new high. We redraw the downtrend like this. We have a new high for a entry long, pull back second entry long failure. You have a failed second entry long again after uptrend played out. So you are expecting bearish reversal. There is some small support though. This is a worry. We're going sideways for quite a long time and it's a little bit steep, but it is a failed second entry long you can consider. Failed second entry long. And this high low is unfortunately right into these lows. We needed to break the low. There's some support. This is not the best trade. Market continued to go higher, some residual bullish momentum, but market continued breaking lower again, breaking all of these previous lows. So this is a sign that the market is bearish and the trend is reversing. Okay, you can see once again you're back in the trend range. So you're following short-term trends. And right now you're following this short-term trend line rule for the downtrend. And you have a new low. First entry short, pull back, second entry short. So you can see this is how price action works. Okay, you're trying to just follow these short-term trends inside the trend range. You follow trend line rule by looking for second entries. You want to get new extreme, and once you are near these key extremes, you expect market to pivot. You can definitely even buy low, sell high if you get some good setup here. We're not fully at the key level, so I don't think we can just sell randomly. But once again, after breaking new high, more advanced trader can consider selling here. A lot of more advanced trades, a lot of aggressive trades. This is what can happen in trend ranges, because why would market go higher here if you will break a new high? You will uptrend, break new high, last push up. So some trader can definitely sell here, right back to the EMA. So you can definitely make a case for more of these trades. But now this downtrend is new low, just like here, second entry short, new low, uptrend, breaking new high. So it's not full at the EMA though. It's not exactly at the EMA, but the context is clear. Downtrend is new low, great signal bar. This is not a horrible setup. Second entry short, at least the tail is touching it, and we're not that far away from it. Now this would be ideal setup. These setups we love. These are extra confirmation setups. Lower high confirming the second entry short, but it's an inside bar. I was on my break here, so I would probably skip this because it's an inside bar. It's a shame there is no ticket higher. If you don't have an inside bar on your chart, you have to take this. A lower high confirmed second entry short. You're at the EMA, you have some kilo here, but because on this chart it's an inside bar, I would skip. If you don't have inside bar, you can definitely take lower high. Even the inside bar is super tempting because the context is so strong. Downtrend is new low. Once again, you can consider your break, push to a new extreme, downtrend played out with the break, and push to a new low. It's such a healthy trend range. There's no imbalance, so you can definitely expect this to be break, new low. And once again, potential long to ride it back to the EMA. More advanced trader can consider to ride it back. But problem is, when you're watching this live, you can also make a case for some downtrend like this. It actually looks pretty convincing. So it's a bit advanced, but you are at the trend channel line. So once again, you can definitely consider riding this back. Actually, when I'm looking at this setup, we can mark this setup. It's quite a decent setup. And I'm watching this in hindsight. Some double top, almost triple top, ride it back. So the safest entry is to wait for a reversal pattern. If you're not sure if you want to buy low or sell high, because it requires experience, because it goes against common sense, and you need to have some experience under your belt to trade these trend ranges, you always want to wait for a reversal pattern. Okay, and this was actually a double high priority setup. Now I'm looking back, you have a new high, first entry long, pull back, second entry long failure. So you have two setups in one, not only second entry short, but failed second entry long. So more reason to take this setup. And now you expect the same thing. You have a new low, first entry short. So I want to see failed second entry short above EMA to predict reversal, because once again, you're bouncing off the low to the key level, so buyers will step and they will buy here. Okay, so I want to see failed second entry short above EMA. No breaks here, so you get final break here. A new low, first entry short, second entry short failure, off the trend line, off the EMA, great signal bar. This right here is a failed second entry short reversal pattern, failed second entry short reversal, downtrend played out, you're in trend range. This is a great high probability setup, off the trend line, market keeps going higher. Okay, small break, new high. But because the push looks so structured, I can easily make it a little bit wider like this. A little bit wider like this. You can see the structure of the trend still looks healthy, like one clean push working higher. Going to draw the downtrend, and I have a second entry long combined with the triple test, new high, first entry long, second entry long. I know that most traders had a different bar here, so most traders had some gigantic bullish bar closing all the way here. So you have this bullish bar, you can't go long because you have no room to scalp out. On my chart, however, I can scalp out. So there's a decent bar. It made, as you can see, 12 ticks, 13 ticks. So easy scalp. The ATR was low, so we definitely are scalping 8 to 10 ticks today. So decent stuff to consider. You managed to get the scalp. 2 legs down, market moves in pairs of twos. So you're thinking about high low of EMA because you expect new high to be tested. You want to see new low for entry short, high low to test the new high. You have massive high low, but you cannot enter because the signal bar is too big. You already reach a new high by the time you have high low, so you can't really take it. But once again, clean uptrend, break, new high. You're pausing, looking to go long. You have a second entry long here, but we're not pattern traders. Today is a good lesson how to follow the trendline rule. You can see clean leg, broad break, second leg up. Be patient, be disciplined trader. You have a second entry long, draw the downtrend, uptrend played out, so I have to pause looking to go long, okay? You cannot be aggressive. There's no reason to go long once you have a break in new high. You are in a trend range. This is not a strong trending market where you can have some continuation. In trend ranges, you expect trends to pivot quickly. Channels are tight, trends are weak. Okay, I don't think you can take anything though. Push back up. This is super unclear structure. You're just stuck in the middle of no man's land. 2 legs down. Again, market moves in pairs of twos. Okay. You have additional push down after 2 legs down. So I'm going to treat this as brand new trend because you have 2 legs down, you low, but market keeps going lower. I have a new low here, first entry short, second entry short, no trigger on double bar. And I have a lower high. This is a decent lower high. When I'm watching the clock, it's already a little bit too late. But, you know, decent lower high. Second entry short confirming. Downtrend needs to get new low. You know, decent low high if it's not too late. Breaking new low, downtrend played out. You got the scalp. And now the market is about to close. So this is the overall structure for today. You can see how predictable trend range is when it's very healthy. You can see no imbalance, just spike up, spike down, spike up, spike down. So you expect trends to pivot quickly and you mainly follow short-term trend line rule, meaning you're drawing these channels tight rather than looking for broad, wide channels. I hope you had a good training. I'm going to wrap it up. I'm going to talk to you next time. Good luck in your trading.